Hey everyone, and welcome back to another Tesla weekly video for today. I hope you're all having a wonderful weekend so far. So let's start off by saying that this is an election year, and during an election year, both candidates will always say things that would make their own base feel better and convince them that they are the right candidate. We've seen that with Joe Biden. We've seen that with Donald Trump as well. More recently, Donald Trump said that he will end the electric vehicle mandate on day one, thereby saving the auto industry from complete obliteration and saving US customers thousands and thousands of dollars per car. Now, again, there are a couple of things you need to know about this. First up, I don't really think this is a mandate per se, meaning I don't see how the government will force you to buy an EV. Plus, the goals that have been set are goals, not saying that it will or will not happen by 2032 or 2030 or so, but it's still a long way to go. These things can change, and me personally, even though I'm a big fan of Tesla, I do still think that it is a free market and the government should not be intervening in whether or not you're buying an EV or a hybrid or an ICE vehicle. If you make that decision to buy an ICE or an EV vehicle, that's up to you. Now, then if we want to talk about the tax credits and stuff like that, that's in my opinion a different story. To which Elon Musk has replied to that post, a surprising number of people think that Tesla survives on subsidies. That is true for our competitors, but not Tesla. He also replied to a tweet that quoted Donald Trump. He said, "Obliteration is coming anyway." He and myself and many others probably agree that, one, Chinese automakers are coming and are going to take quite a lot of market share, plus robotaxis are the future. He continued by saying, "Take away the subsidies, it will only help Tesla. Also remove subsidies from all industries." Now, this is true because if we're talking here about EV mandates, EV subsidies, tax credits, you name it, then we also have to talk about the other side, the other industries that are getting lots of subsidies by the US government or any other government for that matter. So overall, it remains to be seen what actually will happen, because I do believe that a couple of weeks back, Donald Trump did say some positive things with regards to EVs. So remains to be seen what happens. Now, before continuing, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, I do want to touch on the topic of last week, which was the delay of the 8/8 event, to which here again we have a comment by Elon Musk. He said he requested what he thinks is an important design change to the front, and extra time allows us to show us a few other things. We've talked about that. I think it makes sense. What's another 2 months if it's a groundbreaking event, if suddenly they get to show us the platform, maybe a couple of models as well, and a demo. I think it's worth the wait. Now, switching to the Tesla weekly insured numbers from China. So again, pretty good week. The number came in at 11,400. And as you can see, we are certainly outperforming in these first couple of weeks compared to previous quarters and even previous years. But all in all, 2024 is still behind 2023. But if we can continue like this, we could be heading towards another record year, although the end of last year was a pretty good one, as you can see here on the screen. Now, switching to Europe a little bit, this is a year-over-year difference of BEV sales in Europe from January to June. As we know, we've covered this already since the start of the year, we know that Germany is having some issues this year, but it's not just Germany. There are plenty of other countries that last year, 2 years ago, were growing quite fast, and this year they're slowing down, or they have seen some slowdown. But then again, we switch to the other side, which is here Belgium, France, the UK, and Denmark. This year, or at least the first half of this year, has been quite good. Overall, European car sales with BEV share from January to June still very, very low in all markets. Germany, UK, France, Italy, all of them. BEV share, of course, you have Norway, which is always the exception right here. in all of these countries, BEVs still have a long way to go. Overall, the best-selling BEV models in Europe from January to June comes at no surprise, Tesla Model Y and Tesla Model 3. Now, Model Y is down this year, which there are probably a couple of reasons for that. One, maybe the refresh Model 3 is taking over. Two, it still is an expensive car. It's not like in the United States where you get tax credits when the price is already cheaper from the start. No, in Europe it is quite more expensive. In Europe you have less expensive cars available as well that are not available in the United States. So that might be one of the reasons. But overall, they are still the number one and number two. Then in the United States, this is from Sawyer Merritt, US EV registrations in May 2024, Tesla still by far the number one. So let the competition come, but yeah, I still think the competition has a long way to go. Moving on to Tesla Energy, which again is a side of Tesla that now we're getting a bit more attention from analysts and the media, but overall still far away from the focus on the automotive side of things. Now, more recently, we had a couple of announcements. Tesla has secured a new $375 million Megapack contract to build a 415 megawatt, 1660 megawatt hour battery in Australia, one of the biggest 4-hour batteries in the world. The battery is expected to commence commercial operations in 2026. We've also heard that Tesla committed an additional 15.3 gigawatt hours of Megapacks to Intersect Powers. The agreement adds to Intersect's 2.4 gigawatt hours of Megapack under operation or construction, including 966 megawatt hours at 3 Texas sites, set to move from concept to commissioned within 12 months. 2 of the sites will be operated by Autobidder and will boost Intersect's solar and storage capabilities. And by the way, just because these are the ones that have been announced on social media or have been reported by other accounts, does not mean that there are not plenty of other deals that we do not know about. And I mean, with the rise of AI, the need for more computing power, the need for more energy, I do expect that side of Tesla's business to continue to grow quite fast. Then moving on to the Cybertruck, something that many believed and still believe to be vaporware, even though I've personally seen a couple, even though you've seen plenty of pictures and videos out there, so it is real. They are making them and they are selling them as well. In May, more Tesla Cybertrucks were registered than a Ford F-150 Lightning and a Rivian R1T. 3,907 was the number. For Ford F-150 Lightning, the number was 2,353, and for Rivian, the number was 1,237. And Tesla is just starting to ramp up production. We also heard from Elon Musk that the Cybertruck FSD release will come with version 12.5, which also finally merges the city and highway code. As for the Canadian listeners here, this is some good news. So Tesla is one step closer to launching Cybertruck in Canada. Transport Canada has just granted an exemption to allow the Cybertruck's steer-by-wire technology on Canadian roads. The exemption, though, expires in 2029. Pretty strange. The Cybertruck account did also reply and post on X, saying that they're still aiming to launch this year. Then moving on to some analyst comments before the next earnings reports. So we've got a Barclays analyst here raising his price target for Tesla to $225 from $180. Says, while we appreciate the potentially disruptive opportunities from these businesses, we believe they cast uncertainty on the path ahead for Tesla, making success of the stock dependent on bets with seemingly binary outcomes. He, of course, talks about the autonomous vehicle AI businesses. The note continues here, despite the excitement and technical factors supporting Tesla stock, Barclays warns that Q2 results might force investors to confront ongoing fundamental challenges. The bank states, we see a risk of stock reversion to the extent results disappoint, as margin could remain under pressure even if the market reacts negatively to Q2 results. Barclays says the current enthusiasm for Tesla's autonomous vehicle AI initiatives might only lead to short-lived pressure on the stock, which is probably why the price target has gone up, but of course the stock price has gone up as well, so they needed to do a small update before the earnings report. Moving on to our favorite blog poster and analyst Adam Jonas here. So there was a survey, so investor surveys suggest high volatility and AI is bigger than EV. So 3 pithy thoughts from their 2-question Tesla investor surveys sent to their distribution list on July 17, which results aggregated from 137 responses over 24 hours, so definitely not a lot to go by. Number 1, AI is seen as bigger driver than EV by 2-to-1. Nearly evenly split views on 12-month forward stock price performance. Number 3, time to think about Master Plan 4, which may take on new altered significance depending on US election outcome. So, question 1, what do you consider to be a bigger driver plus minus for Tesla's share price over the next 12 months? 33% says core auto business fundamentals, 68% say AI narrative. I believe the 33% is correct here. This is for the next 12 months, not for the next 12 years. Question 2. How do you expect Tesla shares to perform over the next 12 months relative to the S&P 500? Here we have 29% say modestly underperform, 28% say modestly outperform, 17% say significantly outperform, and 21% say significantly underperform. What do you say? Let me know down in the comment section below. And so looking at the stock right now, we had a red candle for the week in preparation with the upcoming earnings report on Tuesday afternoon, Tuesday evening, depending on where you are situated. So expect some big moves from that report and earnings call. Right now, the 200-day moving average sits at $201, the 50-day one pretty close, 202, and the 20-day one closer to $224. So overall, that's about it for this video. We will be covering Tesla's earnings report. I believe I'm going to do a live stream together with Amit like last quarter, so make sure you tune in for that. We're going to do earnings report and earnings call as well, all live, so make sure you are here. That's about it for this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.